Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, February the 7th. The year is 2019. Let's talk trading. How to trade like a pro. We got to think like a pro. Now, some of you who've been with me for years, maybe even a decade, know one of my favorite authors is Edward de Bono, Dr. Edward de Bono. And he's one of the world's authorities on the subject of thinking. Now, thinking is basically asking a lot of questions till you reach a satisfactory answer. That's basically what it is. And as Anthony Robbins would say, TV Tony Robbins, if you want a better answer, ask a better question. You know, I'm glad that there's a few people out there that are liking this how to trade like a pro. They telling me to keep it up and keep doing it. And they're getting some value out of it. Well, I'm glad. Makes me feel good. Okay, thinking like a pro. One thing, if you're a pro trader, you've already know what the possible outcomes are when you enter a trade. You know you're either going to win or lose, right? So a lot of people ask, when do you take profit? Because they don't have to ask about the money and risk management because, I beat that like a dead horse. Every day you see this screen come up, right? Because that's part of the pro. You already know where the loss is going to occur ahead of time, if it's going to occur. So if you're going to lose, you know where that loss is going to occur because you basically put a stop loss on the trade and you can draw a horizontal line right there. It says if price hits this, I lose. Remember, besides money management, the only thing you have to get right is the direction. Now, that being said, how do you get the direction right? Well, you don't really. I mean, basically, you guess. You guess price is going to continue to go up or price is going to continue to go down. Or you might say, well, once price reaches this point, I think it's going to reverse. Now, those of us who trade reversals, sometimes we are fighting a losing battle. We're swimming, against the tide. Because price has been going one way and we think it's going to turn around and go another way. And as I tell people, you are either trading away from the open or you're trading towards the open. Because when the open price is the open price, that's where everything's measured from. If it's a red day, it's because the current price is below the open price. If it's a green day, that's because the current price is above the open price. I mean, that's just reality. That's just how it's done. But it's so simple, yet people seem to forget it. And they talk about price action. Well, price starts at the open, right? We see that every day. We have a weekly open. We have a daily open. We even have a yearly open, and you can see prices below the yearly open now. But it's still above the monthly open. So, with the little candle color multimeter here, we can see daily's red, weekly's red, but monthly's green. Or 6 pips above the monthly open. What do you think you should do right now if price comes to the monthly open? And if we put up the monthly chart, what do you think you should do if price goes to the monthly open? Heads down towards the monthly open. It's not a trick question. It really isn't. I think you can figure it out, right? I mean, here's the monthly open right here. Price came down to it and continued for about 21 or so pips. Price came up to the monthly open and now it's 5 pips above. This stuff's not hard, not difficult. I mean, some traders want to know, well, I trade during this time zone, or I can't trade during that time zone, so what's the best system for me? Well, see, the whole word system, I think, is misused. Okay? Because usually it's all about entry. So it's only part of the equation. So, I mean, what should you do? Trade open crosses. You got the daily, you've got the monthly, you've got the weekly, right? Daily, weekly, monthly opens. You've got the first day of the month, first day of the year, first day of the week. You can trade when price leaves. Here's first day of the week right here. You see what happened when price left that area, right? It's simple. And the thing is when you take the trade, it's like if you're taking the trade right here, there's a few pips, and then maybe it came back, and maybe it hits your stop. What are you going to do? Are you going to be mad? Are you going to say the method doesn't work? But you see, the thing is, you had an opportunity right here. Let me expand this just a hair. And this is something that I guess maybe I can expand. Okay. This is something that a lot of traders struggle with. So you have a low of 28. Your entry trigger was 35. There's 7 pips. Now, they go, well, how do I know if I should take those 7 pips or not? Well, if you look at this next candle, it came down even further, okay? It hit a low of 17. So there was an 18 pip opportunity. Then you see it starts to come back. This is where the exit playbook comes in. See, once again, you should know what to do every pip of the way. I know that might sound crazy, but if you're at +1 pips, what do you do? If you're at +2, what do you do? If you're at +3, +5, +10, you need to know what to do. Now, another problem with traders is when they enter a trade, especially on MT4, they put the whole trade on one trade. Let's say they're trading a whole mini lot, 0.1, okay? A mini lot, $1 a pip. Problem is you can't split that trade. Now, had you put that trade in 2.05 lots, to 5 micro lot trades, It's the same as a mini. You add them up. You could have exited one trade maybe at +5, banked some of the profit, moved your break even up to entry, break, or move your stop loss up to the break even +1. So if price reverses on you, you'd stop out with +1. So you'd have a +5 on half the trade and a +1. But if price continues on, you can still ride part of the action. How cool is that? But it's simple. It's what the pros do. They don't just put everything in at once and take everything out at once. Not usually. They might take it out at once if they have a super big score, price just zoomed one way, stopped, and before it can reverse on them, they might, take all the money off the table. Because you see, a lot of times, like in a trade like this, you had the opportunity, but maybe you were hoping it'd get down to here. But the thing is, many times you get a second chance. So you see here, price came down, pulled back to right here. And so once again, using the wick zones, you know what? It's time to take that trade. Even if you gave back that many pips, don't let it come back and hit your stop. Don't blame the method if the method gave you an opportunity to take a couple pips off the table. That's your fault. Now you could say, yeah, but I could get, wiggled out of trades all the time if I do that. Well, maybe, maybe not. Maybe it only wiggles you out half. Once again, don't put all your eggs in, don't put all your mini lots or micro lots in one basket. Have 2 trades going or more. Now, as we continue on, okay, you can see here we're above the first day of the month open right there, the monthly open for February. So once again, those open crosses. I mean, they're so simple. You can put 3 lines on the chart, the daily, weekly, monthly cross, and you can take the trade. Now, remember yesterday I showed you we were in that inside bar range. Well, you see here it poked its head up a little bit, but on the other side it went down. And see, once again, I don't know why this computer's acting up. It just is. It's not what I wanted. I'm only running MT4 right now, and this is one of those solid state computers. It's got an i3 chip in it. It's supposed to be faster than this. I've got another one with an i5, but I got this one first and just haven't fooled around. But right here, you see, price came down, started to come back into that wick zone. Just take the money off the table. I mean, come on. Once again, simple horizontal line, previous day's low. It broke through big time. If you didn't take that trade, that's on you. 72 pip range, 6 pairs over 100. I mean, there was money to be made. Okay, here we go. The monthly lowest H1 open. There was your trade right there. Monthly lowest D1 open. Here was another trade. That's good for 10 pips. These things happen every day. Once again, the buy zone. Price has to range away from the open. It hit the pivot, reverse, came through the daily open. Okay? You see that? See the weekly open? So we're red for the week. We go red for the day. We come back up into the buy zone. Okay, it comes back out. Time to scratch the trade. Look at that. Comes back down. There's money to be made. So, fellow traders, rat zone trade. We hit the pivot. All I can say to you guys is just remember, it's not how